Micron has just pulled off a financial leap that challenges the physical limits of industrial growth. Quarterly revenue surged 196% year-over-year, with an astonishing 75% sequential increase in traditional hardware manufacturing. That kind of growth curve is almost unimaginable, but this is only the beginning. Micron's guidance for the next quarter suggests that in just 3 months, it will surpass what used to take an entire year of revenue. Behind Nvidia's explosive compute boom, memory chips are evolving from a cheap afterthought into the most scarce and critical core engine of the AI era. Hey everyone, welcome back to Deep Dive Stock Earnings. GPUs are the brains of AI. Memory is the bloodstream. We're breaking down not just Micron's $12.20 EPS, but how its HBM4 is locking into Nvidia's next-gen platforms and how a 25BS smart capital strategy captures upside while avoiding the psycho trap. Micron's financial performance can no longer be described as a recovery. This is a full-scale explosion. Quarterly revenue hit $23.86 billion, with a 75% sequential increase in numbers you typically only see in asset-light software companies. Even more shocking is the earnings leverage. Adjusted EPS came in at $12.20, far exceeding expectations. This kind of growth proves that in a world starving for compute, memory shortages have reached a point where suppliers now hold absolute pricing power. In hardware manufacturing, a 75% sequential increase means production lines are running at full capacity, pushing physical limits. Micron's results directly counter the narrative that AI demand is slowing. What they're showing is a harsh reality. As long as compute keeps scaling, the memory gap will expand exponentially. Micron's forward guidance is putting serious pressure on the entire semiconductor sector. The company expects next quarter revenue to hit $33.05 billion, with gross margins projected at an unbelievable 81%. This is a historic shift. It means a single quarter could outperform what used to be full-year revenue. This kind of margin expansion signals that memory has completely shed its identity as a low-margin commodity. An 81% gross margin, this territory reserved for monopolistic software or luxury brands. It means Micron is operating in a pure seller's market at the high end. Every chip carries a massive technology premium, and this level of confidence in guidance reflects extremely strong visibility into future demand. The AI era has fundamentally changed the role of memory. In traditional computing, memory was just storage, but in AI inference, massive real-time data throughput requires extremely high bandwidth. This shift has driven DRAM average selling prices up more than 60% in a single quarter. Memory is no longer a cheap component, it's now a strategic asset that directly determines AI performance. This is a complete shift in perception. Without high-speed memory feeding data, even the most powerful chips are useless. Micron's pricing power comes from solving the data starvation problem in compute systems. Once memory becomes as critical as the processor itself, pricing shifts from cost-based to value-based. Micron has already moved into mass production of its HBM4 memory systems, specifically designed for Nvidia's next-generation Vera Rubin platform. These 12-layer stack chips, built using through-silicon via technology, are extremely difficult to manufacture, with effective yields at only a third of traditional memory. This structural scarcity at the physical level creates a powerful barrier to entry, securing Micron's dominance in high-margin segments. HBM4 isn't just about performance, it's about isolating competitors. The complexity of manufacturing makes yield rates the ultimate filter. By tightly integrating with Nvidia's architecture, Micron is effectively locking in premium demand for years to come. Beyond the data center boom, Micron is also building a strong presence in the automotive sector as the industry shifts toward level for autonomous driving. Memory demand per vehicle is expected to jump from 16 gigabytes to over 300 gigabytes, a 20x increase. This mobile data center trend positions automotive as a key buffer against cyclical swings in cloud demand. The automotive market operates on a completely different cycle. It's longer term and more stable. Micron's expansion here is essentially insurance for its revenue structure. Even if cloud spending slows, the rise of autonomous vehicles will continue driving demand for high-capacity memory. Facing over $25 billion in capital expenditures, Micron is taking a far more disciplined approach than in past cycles. Instead of blindly adding production equipment, most of this investment is going into foundational infrastructure like clean rooms. This build-first Equip later strategy gives Micron flexibility if demand slows. It can delay equipment installation, avoiding the oversupply crashes that have plagued the industry before. This is a major evolution in management strategy. Micron has learned how to control supply pacing to protect pricing power. They're investing in optionality, not inventory risk. It's like having a faucet you can turn supply on or off depending on market conditions. Even while aggressively expanding capacity, Micron's balance sheet remains incredibly strong. The company generated a record $6.09 billion in free cash flow in a single quarter and holds $16.07 billion in net cash. More impressively, it raised its dividend by 30% during a heavy investment cycle. This isn't just a payout, it's a signal of confidence that current profitability is structural, not cyclical. Raising dividends while spending aggressively, that's the hallmark of a top-tier blue chip. It sends a clear message. Micron's cash flow is strong enough to fund both future growth and current shareholder returns. The kind of financial strength provides serious downside protection. Finally, we need to recognize a critical industry shift. The bottleneck in AI is moving. Over the past few years, everyone has been chasing Nvidia chips, but the next major constraint will be global memory shortages. Without high-speed memory feeding data, even the most powerful processors will sit idle. Memory supply will directly determine how fast AI applications can scale and monetize. To sum it all up, Micron has completed a full transformation to its HBM4 advantage, flexible capacity strategy, and fortress balance sheet. So the question is, in a future where memory prices keep surging, who can realistically challenge Micron's dominance in high-end AI memory? Let me know your thoughts in the comments. This is Deep Dive Stock Earnings, and I'll see you in the next one.